Let's be clear, if you're going to run 333, but you then overshoot to a $1,500 or a $2,000, remember, markets overreact in the opposite direction. Everyone suddenly becomes silver is the god money and overreacts. There is a point where I will sell this. There is a price point. I don't know what the dollar represents at that time. I don't know what currency will be in force at that time. If it's still a dollar, a digital dollar, something else. But when measured to old dollar terms, it will be in 4 digits. I have quite high expectations for that event.
The gold and silver markets have ignited in early 2026, with gold holding steady near $4,500 an ounce after a historic run above $4,000. However, silver is the real standout, entering a price discovery phase after a massive 120% surge in 2025. Despite a recent sharp correction from record highs of $84 to roughly $75 per ounce due to profit-taking, structural demand remains relentless. A 5th consecutive year of silver supply deficits, fueled by the iPad car revolution and AI data centers, has created a gift within a gift for investors. With the gold-silver ratio compressing toward historic levels, analysts suggest we are in the early stages of an explosive breakout rather than a peak. In this exclusive breakdown, precious metals strategist FrancisHunt delivers a high-conviction forecast for what he calls the twin turbo move in white metals. FrancisHunt argues that we are currently in a fiat and debt debasement environment that dwarfs the 1971 Nixon moment, positioning silver for a run to a $333 resting point and eventually into 4-digit territory like $1,500 to $2,000. He explains how the suppression of silver mining as a mere byproduct has led to a physical squeeze that cannot be fixed by anything but a massive price spike. Could silver truly become the god money of the next decade? And is the current dip the last chance to get in before the parabola goes vertical? Watch to find out. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
We've been aggressive, super aggressive. I call myself the biggest bull on silver and platinum, or almost more so, the white metals, because of the fact that we're in a fiat and debt debasement environment. And that is such a huge fiat and debt debasement environment that it is by scale dwarfing that which occurred in the 70s post the Nixon 71 moment on the removal of gold as a backing asset for the dollar. Just to be clear what we're looking at, the silver price on a quarterly basis, that runs you back to the 1950s all the way along up here. And I was discussing squeezes as a volatility constriction that tends to bring the springboard of future massive moves. So we've actually had the technical support for the fact that there was a major breakout coming for silver. Typically, we would buy the breakout there and put the stop loss there. However, as I was mentioning, you often get a gift within a gift, and the markets love you. I teach people the markets love you. You're just not seeing the gifts. We are like blind animals walking on pearls and gold and diamonds when we are in the markets, because the market wants to love you, wants to give you gifts, and you just got to bend over, open your eyes, and pick them up. So that was a squeeze within a squeeze that saw actually you should have got leverage long at 25. You would have had a super tight stop, and you're waiting for a target that we have at $333, which will not be the high, but it'll be a resting point where you'll probably pause for a period of. And we've done that draw.
So a consolidation would come around that time.
Yeah, a period of consolidation. In terms of calling the final top, it's not that. Let me be absolutely clear. So we have the 330 over there. It's generated from HVF method, but we have a target of 333, but we have overperformance expectation. So we usually just do a partial close of around 50%. So when do I sell silver? Because your question was, should gold guys rotate in, or have silver guys overstayed their welcome and should they be getting out? And the answer is the exit for silver for us is going to be determined by the gold-silver ratio. So here we can see that this is correcting, but this is insufficient history. This is running us back to 2007. In fact, this is all capturing the cycle of the financialization of everything.
Yep.
That had its first run, Vietnam War, pre-Vietnam, Gulf of Tonkin 64 to the 71, and the finishing of the Vietnam War probably officially at 74, although there'd been many withdrawals already by then. So you have that sort of decade of there. None of that is in the view. This has been the financialization of everything, where silver was suppressed relative to gold. So you have insufficient data. I'm saying to you that in actual fact, fundamentally, and on many other measures, Egyptology, it was 8-1. Other measures have been 15-1, 10-1, 12-1, variously around them. There's been one or two more recently during the financialization era that had 30-1. But that was still part of the suppression of silver era, when there was large amounts of silver above ground that could still be leaned on to be utilized. If you have excess inventory, you can always allow valuations to stretch on one of them being devalued because of that inventory. Once you've run it down, which is pretty much where we're at, and everybody says if you don't hold it in a vault inside your own country's borders, you don't have it, and there's now a run, you end up with a problem. And the supply side has been suppressed during this period. Actually, 60 to 70% of silver supply is as a byproduct. So that actually means you don't have very many dedicated silver miners. You have 30 to 40% of your total supply is coming from someone whose specific business is to extract silver. And that's a real problem, because people don't do the byproduct. They're less interested in the byproduct. They're going down for the zinc, the gold, the copper, the iron ore, or something else. And that's okay. While we've already spent the energy, this is kind of useful. We'll take that out. They're not digging there because of silver, and they can't forecast for it. It's a random byproduct. It's just there. If we see it, we see it. If we don't, we don't. So it's not a silver enriched area. And what the problem is, there are mines which have silver ores of reasonable quality, or certainly places where silver is known to be, but it's not been financially viable to do, because the energy involved in digging a hole in the ground to extract silver is too much for the price that's on offer. And the only thing that fixes this is price.
Yep.
And now, as we get pushed towards the iPad car, the iPad everything, the battery world of everything, everything is a rechargeable battery, because it can come with surveillance grid software based in it. They want to remove your gas stoves and everything. You know, we're being pushed into this world. Well, the darkness of that surveillance grid decision to have us all in Tesla type cars, as the iPad cars as I call them, is the gift for the silver market, because solid state batteries will now do 900 kilometers. That's a great range. I tend to like 1,000 Ks as a range, and you're not filling up very often. I have a big old Range Rover that chews diesel, a big turbo V8. I'm hated by the eco guys, but I can go all the way into Namibia from South Africa on one tank. And you know, now you're getting battery cars that can do that and do an 80% charge in 8 minutes. That's probably how long you spend at a petrol place when you grab a P and you fill up your tank. So, but that would require 20% of, if we just went to a 20% share of those supremely superior batteries, would require 100% of current production of silver. That means no silver for solar panels, no silver for anything else, no silver for devices. Don't forget, they run hot in these, they run hot in missiles. Everything is now consuming more silver. And we've spoiled the game of mining. We did it on the green agenda, first of all, by making permitting a headache. It takes 15 years to get a mine. My overall impression is that we're in the contagion part of the correction in the gold-silver ratio. So this is rolling over. Most rallies are followed by downside continuation. You can see it there. And we said 65 was the key level, and it should be run. That is a triggering of a kind of a macro head and shoulders that we have on a much bigger time frame, technically, that we've drawn many times on our own channel and we remind people of. It's not the most beautiful typical structure, but it is a structure. And you can see 65 was key. You went as high as 126, and then you are in a real triggering event. You've triggered at a downside event here, which has a very, very deep repercussions that should see you run to 32 just on that technical pattern. and then further overperformance and reversal on that. So we actually see a single-digit gold-silver ratio returning as a higher than priced for probability overall. And that means, to answering the question again, is it too late for silver? Well, if it's going to $1,200, does $82 sound too expensive for something that's going to $1,200? The other thing you wanted me to address is the law of the parabola that we referred to very specifically. And this is the exponential chart that actually the largest part of your money is actually made in the last 5 to 10%. You'll make 50% of your profits in that final 5. People will sell too soon. So let's be clear, if you're going to run 333, but you then overshoot to a $1,500 or a $2,000, remember, markets overreact in the opposite direction. Everyone suddenly becomes silver is the god money and overreacts. There is a point where I will sell this. There is a price point. I don't know what the dollar represents at that time. I don't know what currency will be in force at that time. If it's still a dollar, a digital dollar, something else. But when measured to old dollar terms, it will be in 4 digits. I have quite high expectations for that event.
Ultimately, the analyst's message is clear. We have entered a period of hyper-financialization where traditional supply metrics no longer apply. While most investors panic during pullbacks, this strategy views volatility as a springboard for a parabolic move that could redefine silver's role as god money. By utilizing the HVF method to identify squeezes within squeezes, traders can secure high leverage positions at critical support levels while the rest of the world remains blind to the gifts of the market. As industrial demand for solid-state batteries begins to swallow the global silver supply, the real question isn't whether you should buy, but whether you have the stomach to hold until silver hits 4 digits. If you found this breakdown helpful and want to stay ahead of these historic market moves, make sure to like, subscribe, and turn on notifications so you never miss an update. Your support helps the channel grow and keeps you informed when the markets shift next.